India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, middle of the week. Markets are a little tepid, globally speaking. They've had an up and up kind of a journey. The US, that is specifically here in India, we saw a bit of a breakout move. So can that sustain? That's the question. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, good morning.
Hi, good morning.
Morning.
And Nigel, good to have you back. I guess we're dealing with global cues that are not fully supportive today. There's been some profit taking across the board. We'll see how it goes. Because even yesterday, I remember in the last half an hour, we started giving up a little from the top. So interesting right ahead.
Well, that's right. So that buy on dips thesis will be tested. Let's get straight to the action.
Absolutely. And actually, in the US markets, it was not really this way or that way. It was a little lower. So obviously lower is lower. But it was not backed by volumes. For example, I didn't see the volumes last night, but the day before volumes were 50% lower, as compared to what we had over the last 20 days. I mean, the 20-day average. And I suspect yesterday as well, it was far lower than what you usually see. So these moves that you're seeing in the US, and by the way, that holds true for the move up as well, and of course this pullback as well, is not really backed by all of the market participants really sort of pulling their weight. But in any case, I mean, price action is what it is. So US markets ended lower after 8 consecutive daily gains. S&P down about 0.2. The Nasdaq down about 1/3%. Russell 2000, there was a bit more sort of damage there, 1.25% lower. Now, a fair bit of moves on, yields, etc. The Treasury market, the 10-year yield lost about 6 basis points. We're at about 3.81. So that's interesting. The euro rallied. The euro USD reached a new 2024 high of 1.1125. As a result, as a consequence of that, the dollar index, which is essentially the dollar as against a basket of currencies, that slipped once again to 101.39. Again, I mean, something which I think is good for emerging markets broadly, but I think yesterday's impulse move was, of course, on the back of what we saw on the euro, which has got a large outsized role on the dollar index, if you look at the dollar basket. Up ahead, we will see the US, that is, will watch for data. There is some later today, but nothing of consequence. I think Fed minutes come out later today, tonight in the US. But the big ones are the flash PMI numbers, which will give you a sense of how the economy is doing. And then, of course, the Powell speech at the Jackson Hole Summit, that is only on Friday. And, of course, markets will, unless and until it's really, it's not Jackson Hole, a lot of attention which is paid, and the snowy mountains and, the speeches and the programming, etc., which happens from there. But it's not something which has moved markets that much. Or if you go back last 10, 15 years, maybe once or twice. I think 2021 was one of those Jackson Hole summits where markets moved meaningfully. But are we at that stage? We'll see. I don't think so. Gold rallied as well. It set a new record high. I think it got to about 25.34 and then pulled back to about 2,500. And that's, again, something which is worth noting, especially here in India. Oil prices, they are now down to about $77 a barrel. They've been on the back foot. OMCs, oil companies, etc., were in focus yesterday. Now, where does all of it leave us here in terms of levels? So the Nifty yesterday closed above the upper end of the gap area. Although by close, we did give up about 40 points from the day's high. The day's high was about 24,738, 740-ish was the high, and we left off at about 24,700. So a little off the highs. But we've sustained above that gap area, which is the most important thing, and we need to do that. Not give gains, not let the Nifty sort of slip below that once again. On the way up, and I said this yesterday as well, the path to a new all-time high and the earlier all-time high, which is 25,078, clears up. You can broadly see the outlines of it. It perhaps will take time. It's not very far away. In booming markets, it's a two-day job. In not-so-booming markets, it may take a little bit longer. Supports come in at the 20-day moving average, which is the 24,500 mark roughly, 44.88 to be precise as of yesterday's close, and then the 40-day exponential moving average under it, which is 24,218. The Nifty Bank finally sort of got its head above the 20-day moving average. It had struggled under it for a while. Yesterday, we got a close above it. Not a very decisive close, but a close above it nevertheless. And here, I mean, you're basically looking at next targets as the 40-day exponential moving average, which is 50,865. And there is a falling trend line, and the Bank Nifty will meet that trend line at 51,410. So these are the two next levels on the Nifty Bank. Supports come in at the Monday's low. That's a simple kind of, a low that you look at on a daily basis. 50,283 is that number. GIFT Nifty will indicate what the start is going to look like. It's a flat, absolutely flat start, 18, 19 points lower. Surabhi.
Absolutely, and I guess flat is not bad looking at how a lot of the Asian markets have opened out, because many of them are down between 0.5% to as much as 1%. I was actually looking at the move in the currency space in a little more detail, and there are all kinds of narratives. One narrative on this dollar's persistent weakness is that perhaps, this is a bit of a, Kamala Harris winning, Trump losing kind of a, build-up that's happening, because the market seems to be believing that Trump's policies are going to be more inflationary and Kamala Harris's won't, and therefore that could have a bearing on Fed policy. Anyway, when it's election season in the US, all kinds of theories doing the rounds. But the short point is that the dollar index is at an 8-month low. The last time we were below 101 was in December. So we're still not below 101. Let's see how this one goes. The DXY is down about 2.5% in August. And this is despite the improvement in data that we've seen. That same data helped the equity market snap back, but not the currency. Jobless claims, what we saw in services, and of course, the retail sales print. So that repair did not happen in the USD. It happened only in the equity screen. So that's something to keep in mind. By the way, the dollar yen remains in focus as well. And the dollar yen, there versus the yen, the dollar continues to weaken even more. We're seeing levels of about 145 once again on the dollar yen, so need to watch that. We've had export-import data out of Japan this morning. It's a little mixed for the month of July. Exports have grown, but not as much as expected. They've grown about 10.3%. The number looks really good, but the expectation was over 11%. Imports have surged in Japan. Imports are up almost 16.5%, which is more than expectations. So that's just a bit on the Japanese data. Let's come back home and see the cues over here. As usual, FIs are still on the sell side, barring that one day, I think it was Monday, when we had a positive figure come through, which was Friday's number. The rest of it has been negative, so we're still down about 1,500 odd crores on the FII front. Domestic institutions net buyers of about 2,200. In terms of individual pockets, stocks and, corporate action that will be in focus, I'll watch out for telecom, because we've got the numbers in. Jio is actually slowed down. The pace is slowed down. The addition, and if you look at it month on month, there's a loss of about 2.8 lakh subscribers. Bharti has continued. Flattish trends, minor increase month on month. Voda Idea still losing customers. It's lost about 8.6 lakh, which is not as much as how many it lost. In the last month, it was 9 lakh, over 9 lakh customers lost. This time, it's just about 8.6. So we'll see how that goes. But the big story in the focus is going to be Cyient. Cyient is going to do a large block trade. It's going to sell about 14.5% stake in Cyient DLM. The rationale is that they need to pare down debt and maybe they'll invest more in M&A. But it's a big block trade, so let's see how this goes. I think it's going to be a natural individual stock action, and that has been the case last couple of days. It really keeps the market busy.
Well, that's right. And give and take everything, you'll have to lean towards the long side rather than the short side. Now, going by the Q is the weaker dollar index as well. And this market has been trending up. Well, yesterday was a good trading session. In fact, there was a bout of short covering that did take place. So besides the cash market flows, you saw on the Nifty, the open interest is down by close to 2%. On the Nifty Bank, there was a bigger bout of short covering that did take place because the market moved up and you did have the Nifty Bank that was lower in trade. What do the FIs do? Well, it perfectly ties in with the data points that we're looking at. They covered 18,000 shots. They added close to around 8,000 long. So that's a swing factor of around 26,000 contracts. They remain net long, but mildly so. So if you just pull up, both the FI as well as the clients, both of them are net long on the index with around 26,000 and 35,000 long contracts odd. And on individual stocks as well, they've maintained their long bias. Well, moving to, the options data, there appears there's a bit of a strategy in place at around 24,700 call as well as put. What is that? It's likely to be a short straddle. When you write the same strike, the call and put, you pocket the premium of roughly around 200 rupees and you're bracing for a bit of a range. And this contract expires tomorrow itself. So if you take 200 rupees and you add to the 24,700 and you deduct from 24,700, you're getting the broad band on the Nifty. On the lower side, you're looking at around 24,500. On the upper side, you're looking at around 24,900. And the level should come up for you on the screen as well. The 20 DMA is closer to around this 24,500 mark. If you get past this level, then you're looking at fresh all-time highs, which is above the 25,000 odd mark. But today, the Nifty Bank will particularly be in focus. It had a bout of short covering yesterday. It ended close to around the 20 DMA. You wanted to hold above the 20 DMA. And yesterday's high was important as well at around 51,000. That's the highest you've seen in the last couple of months. Finally, stocks that we're looking at, a few of them came out of the F&O band, so I'll keep an eye on that. You had Chambal Fertilizer, India Mart, you had NMDC, as well as PNB. All of them came out of the F&O band. We've been making this point that a large number of stocks in the F&O band, some of them come out. Expect some action on some of these names.
All right, Nigel, thank you very much for that. So that's a summary of everything you need to know as we begin this Wednesday morning. Rajiv Agarwal is now joining us. He's managing partner and fund manager at Doordarshi India Fund. Rajiv, great to have you with us here on the program. Thank you very much for your time. Prashant, this side. I mean, are we looking at a broadly kind of risk-on phase once again for equity markets, especially, you know, the best performing markets, which is India and the US? What's your sense?
Absolutely. I think you have seen in the last few weeks, especially as Fed and the various Fed governors have come in and talked about, you know, they are comfortable lowering the rate. The equity market has taken off. And I think as that happens, the world market is also pricing something similar. And therefore, the risk-on trade that you are talking about, Prashant, is something that is playing out in full force right now.
And it takes us to basically looking at newer highs in that sense, both in the US and India, Rajiv, you would imagine?
Yeah, I mean, I think this market, as last time you talked about, Prashant, that, you know, this is a Teflon coated market. And I feel so. And, you know, everything that we are seeing sort of continues to confirm the same. And I feel like, you know, at this point, there is nothing really which is a big hurdle. I think in the past, interest rates were a hurdle, and now that is also being taken out. So at this point, I think, unless in the US, of course, there's a big election coming up, and we will see how that plays out. So that is a big uncertainty, and we'll have to sort of wait on how that plays out. But overall, I think from an Indian market perspective, I think things are looking pretty good.
Hi, Rajiv. Good morning and good to see you, Win. Thanks a lot for joining. And Rajiv, do you think we're getting a little ahead of ourselves, though? You know, this Teflon coated, buy the dips. It's been working. It's become all too easy, actually. Your view, and also you don't shy away from naming a couple of stock sectors that you like. Anything you've added in the last couple of weeks?
Yeah, so I think, I think this is a market one has to be careful. Just because we are hitting new highs doesn't mean that we should let our guards down. And when everybody is greedy, one has to be fearful, as Warren Buffett says. And so I think that is something that we are sort of doing for ourselves, which is to ensure that we are asking for more margin of safety as the markets keep running up, because it's very easy to let our guard down and just go with whatever the markets are doing. But we are continuing to look for new opportunities. We always do. And frankly, at this point, given how the markets have done, it's very hard to find that many new opportunities. What I have talked on your show in the past has been in the banking and the NBFC space, and that space continues to look interesting vis-a-vis the rest of the market.
Okay, the point is, Rajiv, that the market, at least here in India and maybe even around the world, markets seem to be tiding over every possible issue, every possible hiccup. I'm not even calling it a crisis. And there's just buying at every dip. I don't know, I mean, when was the last time in your career you saw this? Are there any parallels? And how should one navigate a market that basically refuses to fall? And you're saying it's tough to find buy ideas. What should investors be doing?
Yeah, so I think one of the things is that if we don't find good ideas, we're happy to keep cash. And so that is one thing I would encourage investors to do, is to, if they're not finding good ideas, don't be in too much of a rush to chase whatever is working, because when things go down, it's very hard for you to then figure out what to do. And so I think the important thing is really to keep checking your thesis, ensure that you are comfortable with the companies that you own, look at the new data points, and revalidate your thesis. And especially as the prices keep running up, you have to decide from there on what has been the returns. So I will give you an example. Today, I was reading Wall Street Journal, and they were talking about the S&P 500 forward price to earnings is around 25 times. And when S&P 500 is at 25 times price to earnings, the forward return for the next decade is almost zero, is near zero. So really, people think markets are doing well, and therefore it will continue to do well. They extrapolate. But the problem is, as the markets go up, the forward return keeps coming down. And so one has to be very mindful of the fact that the forward return will not be as good if the prices keep going up, and one has to account for that. Now, the momentum may carry on for some time, but at some point that momentum will break if the fundamentals don't support that momentum.
Rajiv, I'm just cross-checking that data point. It was a very interesting one that you brought up. If I heard you correctly, the data says that the last time the S&P 500 was trading at forward earnings of 25 times, it was a zero return decade, the next 10 years that followed. Is that right?
That's right. That's right.
I'm going to remember that.
Around the 2000, in the 2000 period where the S&P 500 is not high.
Okay.
All right, Rajiv, we leave it there. Thank you very much for joining us, and appreciate you being here on CNBC TV18 as always. We'll take a quick commercial break here, but we'll sort of leave you with some more opinion that we're getting through the course of the day. This is Jonathan Garner of Morgan Stanley, who's weighing in. He says that the EM outlook remains tricky. They see lower targets for China amid ongoing deflation and institutional risks, leading them to downgrade Mexico. They remain overweight Japan and India. Jonathan says that India presents a compelling structural opportunity. He adds, in their view, 11 to 12% nominal GDP growth, the rupee support from improved macro stability, and a rising profit share of GDP in India bode well. Relative valuation stand at 0.2 to 1.3 standard deviations expensive versus history, which according to him is justified by superior profitability and net profit margin and a positive bottom-up and a country sort of outlook.
Let's come to bonds then. Neeraj Gambhir of Axis Bank says the 10-year Indian benchmark bond yield traded in a narrow range of 6.85 to 6.8% for the week. He says US Treasury yields hardened as jobless claims data came in lower than market expectations. Consequently, he says domestic bond yields inched up higher on Friday. He adds that GSEC auction cutoffs were on expected lines. He's expecting the 10-year benchmark bond yield to take cues from Powell's speech at Jackson Hole and trade in a range of 6.8 to 6.9% this week.
Well, a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment. But let's run you through the list. We're looking at PNB Housing Finance, Petronet, L&T, Dr. Reddy's, Genius Power. All of them will be reacting to positive news flow, while we have Cyient, DLM, Vodafone Idea, NHPC, HG Infra, and Pratap Snacks that will be reacting to negative news flow. For the time being, though, we slip into a short break. We come back. We'll focus on all those top 10 stocks that we're talking about.
Welcome back. So let's talk about all the stocks that should be on your radar as we kickstart trade this Wednesday morning. We have our entire team standing by with the CNBC TV18 list of top stocks to watch. Let's start off with the Cyient DLM, which would be in focus because the parent company Cyient may be selling a large chunk of equity via block trades. Abhishek, I know you're looking at Cyient as well as PNB Housing. Let's go to both the stocks.
Well, to begin with, Cyient board has approved the stake sale of 14.5% in Cyient DLM Limited. So sources do tell us that the issue size would be around 861 crore. Floor price is at 748.65 per share, which is at a discount of 5% to yesterday's closing price. Now, promoter holding will decline from 66.66% to about 56.1% post the deal. This is, a lock-in period of 90 days that is there for the residual stake of the promoter. And if you take a look, sole BRLM is Axis Capital. Now, again, sources do tell us that General Atlantic Singapore Fund will be selling their stake in PNB Housing. The floor price is at 775 per share, which is at a discount of 4.5% to yesterday's closing price. The offer size is about 1,033 crore or about 5.1% of the equity. Looks like a clean out trade. The entire stake of General Atlantic will be sold in PNB Housing in block today. The sole BRLM is IFS Securities over there. Back to you.
Okay, all right, Abhishek. Thanks a lot for that. Well, let's hop across to Reema. She's here to tell us about the telecom companies that will be in focus post the June subscriber data. Morning, Reema.
Hi, good morning. So TRAI has released the month of June subscriber data, and this is what the numbers look like. So Bharti's added about 12.5 lakh subscribers, similar to what they did in May. Vodafone Idea, despite that fundraise and upping of the capex, continues to lose subscribers. So they've lost 8.6 lakh subscribers, less than what they did in May, which was over 9 lakh subscribers. It's still a big number. Reliance Jio continues to add a healthy bit and leading in terms of subscriber adds at 19.1 lakh. But just bear in mind that these are June data, so they're already captured in the Q1 numbers that we had and the subscriber additions.
All right, Reema, thank you very much for that. There's, of course, some tragic news out of Sikkim. And NHPC is the company which perhaps gets impacted. Vivek has got details here. Vivek, morning.
Well, good morning. That's right. So, on the back of a landslide in Sikkim, what's actually happened is that NHPC that had a power plant over there called Teesta 5, this particular power plant has a capacity of close to 510 megapart. That got affected. The TRT structure, that is the tail race tunnel structure, has actually got impacted. Now, remember, this particular plant is still not operational given the fact that there were flash floods as far back as October 2023. Since then, this particular plant has been shut down. And now what the company is saying is that they're still assessing the situation. Earlier, post the flash floods in October 2023, the company had said that restoration works were expected to be completed by March 2025. Now it remains to be seen whether there is any further delay as far as this particular power plant to be operational again.
Okay, so yeah, tragedy. And NHPC, this plant has been troubled for a while now, as Vivek pointed out. Thanks very much, Vivek, for the updates there. Let's see if there's any impact on the stock. On to Sonal then. Sonal, news on Petronet LNG. They're looking at a long-term contract?
Oh, yes. It's a long-term contract, which is a positive for the company. They have gone ahead and signed an MOU, which is with LTL Holdings in Sri Lanka. This is for supply of LNG to their dual-powered power plants in Colombo. It is a 5-year contract, but the company says it is extendable after agreement with both the parties. Now, there are some calculations which ICICI Securities has done. Now, remember, it will be done from the Kochi plant, where already the volumes have been around 0.9 to 1.1 million tons per annum. ICICI Securities says, considering the power plant capacity, there could be additional volumes needed of 0.3 million tons per annum of gas. This would mean additional volumes coming in from Kochi plant, which is a positive, though the EPS addition could be 0.3 to 0.5 rupees per share only on an EPS of around 28 rupees. But this is an overall positive, and that's why the stock could see some green today.
Okay, all right, Sonal, got it. Thank you so much for that. Back to Vivek. He's watching out for some more stocks. Vivek, what's the list looking like?
Well, two stocks where yesterday we saw large block deals, just dissecting the information over there. So HG Infra, again, yesterday we saw a couple of large block deals, almost 2.5% equity exchange hands. So 3 promoter family trusts have actually sold stakes. So Girishpal Singh family, Harendra Singh family and Vijendra Singh family, all of them have paired close to 0.9% stake in the company. All of them held close to 25% stake as well. Now, who are the buyers? The buyers were Aditya Birla Sun Life Mutual Fund, close to 0.75% stake they picked up. Tata Mutual Fund also picked up close to 0.7% stake. On the other hand, Pratap Snacks also saw one promoter actually exit close to 0.6%. Rajesh Kumar Mehta sold 0.6%. He held a total of 2.85% stake in the company. This particular deal was done at a rate at 865 rupees a share.
Okay, all right, Vivek, thanks a lot for that. Well, let's wind this down with Sudarshan, who's joining us to tell us about some stocks in the news. Morning, Sudarshan.
Morning, Nigel. So I have 3 stocks with positive news flow. We'll start with Dr. Reddy's. Company has signed non-binding agreement with US-based company Kinomix for development of anti-malarial drug, and this MOU remains subject to signing of a definitive agreement, and commercialization of this drug will be in US, Europe, and in low and middle income countries. Second is L&T. Bombay High Court has ruled in favor of the company in case with respect to service tax demand of more than rupees 2,200 crore. High Court has accepted the writ petition filed by the company and quashed and set aside show cause notice issued by GST authorities. Last is Genus Power. Company has backed 3 letter awards worth rupees 3,610 crore, and under this order, company will appoint advanced metering infra service providers. Also will design, supply, install and commission 4.26 million smart prepaid meters, and with this, total order book size of the company now stands at 28,000 crore rupees.
All right, so thank you very much for that. So that is essentially what you need to know as far as stocks are concerned. Here's a quick recap of our top stocks. Stocks with positive news flow are PNB Housing, Finance, Petronet LNG, L&T, Dr. Reddy's Labs, and Genus Power, while stocks with negative news flow are Sign, DLM, Vodafone Idea, NHPC, HG Infra, and Pratap Snacks.
Okay, all right. So that's our stock list to watch this morning. That's on the equity side. Let's move on and see what's happening in the world of commodities. We have Manisha with us on the phone. Manisha, good morning. So the falling dollar continues to make headlines. What is it that you're looking out at today?
Well, thank you for that, Surbi. Yes, the declining dollar has been supportive and most supportive actually to the gold prices, which hit yet another all-time high, this time around at $2,520 an ounce. So we have seen very shallow corrections in gold and the funds continue to stay invested in gold. That tells you that this rally is quite strong. But crude oil prices have continued to decline. Yet again, there's an increase in U.S. inventories. The ceasefire talks in Egypt also continue to weigh onto the prices. The good gains have continued in metals, though, where you have copper prices holding firm at around 2-week highs. Aluminum is now surging towards 6-week highs. There is increased fund buying. The China aluminum imports have increased by 11% in the month of July. And then there is rising cost of alumina as well, which seems to be supporting aluminum prices. One area that you should keep an eye on today is the sugar prices, though, because overnight in the international markets, we have seen a sharp decline, bringing the global sugar prices now to a 2-year lows. This is on the back of weak China demand, decline in crude prices, strong crop expectations in India and Brazil. All of those factors weighing on prices.
All right, Manisha, thank you very much for that. So we'll keep an eye out on sugar stocks here as well. We'll take a break. We are back with our market guest. We'll have Devain joining us a little later. We'll also have the management of Indoccount Industries, Kailash R. Lalpuria, my colleague Nimesh spoke with him. So we'll play out some of that conversation on the other side. Stay tuned.
Welcome back. You're watching Bazaar Morning Call and hope you're having a good morning. Well, as promised, let's get chatting with Indoccount Industries. The company has given the FY25 volume growth guidance of around 13% on a year-on-year basis, as well as margin guidance in that vicinity of around 16 to around 18%. To talk more on the outlook, we have with us Mr. Kailash Lalpuria, the Executive Director and CEO of Indoccount Industries, who's joining in from the 20th Motilal Oswal Annual Global Investor Conference. Hi, Mr. Kailash. Good morning, and thanks a lot for joining in. It's been a while since we spoke. Well, despite a seasonality weak quarter, you have reported a rather good set of numbers, both on the top as well as on the bottom line. Do you expect this sort of a trend to continue for the remainder of the fiscal?
Yes, we reported a very good quarter, which is our best quarter, we would say, with a 27% revenue growth and 26% volume growth. And among all the 4 quarters, this is the weakest quarter, but still we performed very well, thus showing that the trend would continue. We have already given a guidance of 110 to 115 million meters going forward, maintaining the margin of 16 to 18%, and that correlates to almost 20% growth. So we are on track.
Okay, sir, in the near term, the US elections have had an impact on the textile space in it. I mean, there's a lot of uncertainty, right? So do you see any challenges at all once we're through the elections? Will the outcome have any bearing on demand for a company like you?
The US elections are of lesser relevance to us because both sides are good to India, and as a country, to us, we have performed well under all conditions, and we intend to do that in the future as well. India has come out as a strong supply chain manager, so it can perform very well going forward in the textile sector, which not only the US but other countries also realize that India, they should target for bilateral trade going forward in textiles, and we are very confident that whichever government is elected, we will get the necessary support because India is in a sweet spot.
Well, Indoccount has maintained the discipline on the debt side, sir. Do you sort of expect, how will you maintain this as you go ahead with some of these acquisition plans, and what can we expect there?
We have never leveraged our balance sheet. You know, that is the last thing which is in our mind, and we will never do it. We are almost a debt-free company, and we allocate our capital into our growth, and we plow back the profits into the company for the growth, and also providing the necessary distribution to all our stakeholders. Our dividend payout is good, and we invest into growth and sustainability, which is the foremost thing a company should do going forward.
All right, tell us, what is the outlook for the overall textile industry? From an Indian market perspective, how do you see things shaping up?
The textile outlook is very good. Among, say, 5 top textile companies, China, India, Pakistan, Bangladesh, Vietnam, I always say that Bangladesh and Vietnam are labor arbitrage. They do not have raw material. Pakistan has got a saturated supply of raw material, whereas China plus one, we are all seeing, they have faltered onto their supply chain and their cost has gone up. India stands out not only from a cost standpoint, but also from a supply chain standpoint, how they can secure the supply chain in this decade. And that's why you see all the retailers and the consumers out there are looking at India prospectively to see that how they can leverage their supply chain to the next level by sourcing out of India. And because India is also having a strong economic backdrop and it is growing, everybody would love to do bilateral trade with India, grow their market share and participate in the economic outfront in India.
All right. Now, in the last few years, a lot of the US retailers have shut down, or they've seen sort of business headwinds. How beneficial is it for you and other companies? Do you see a lot of business coming your way?
Definitely, because you see the US retail has shrunk to a certain extent, and there were big retailers which went out of the business, unfortunately. Their market share is up for grabs. The existing retailers out there have got their share increased to various means by formulating new strategies. We are working on these strategies onto our brands, onto our distribution, and onto our product development, where we are offering them a complete solution, not only on the product mix side, but also on the services side, thereby increasing not only our market share, but the existing retailers' market share. So this is an opportunity for us to grow not only as a company, but India as a country. There is a great demand out there in home textiles and apparel, and India should certainly do well in the coming years, not only in the US market, but in other trade blocs like EU, UK, Australia, UAE, and other GCC countries.
Okay, good conversation, and thank you very much for joining us here with some of that perspective right now. We have Devin Choksi with us, Managing Director at DR Choksi FinServ. Devin, great to have you with us here. Thank you for your time. Appreciate it. You know, let's start straight up with what was on the downside the sector of the day, which is the shipbuilders. You had Mazgaon down 9, Cochin down sharply, Garden Reach down sharply, and these stocks, as Hormuz was telling us yesterday, we'll pull up the graphics as well. They're down between 25 and 35% from their recent highs. You know, in the larger scheme of things, if you got in a year ago, 2 years ago, 3 years ago, I mean, then these look like small pullbacks. But what's your sense, Devin? You know, where from here?
Yeah, good morning, Prashant. Well, my understanding is that on one side, the market probably scaled up significantly on a higher amount of earning growth and the buy earning multiples. So I think it was the last year and the earlier year wherein the lower base effect, I think, was playing a lot. With the new order book coming in for most of these companies, I think obviously on a lower base, I think these companies started showing relatively better performance on the growth side. Now, I think this year the reality has kicked in. Probably we are going to see the real growth coming in on a higher base. And that's where probably I think the premium valuation, which most of the companies have commanded up till now, I think they are up for some amount of correction or rationalization. In my viewpoint, I think not only some of the shipbuilding companies which you have talked about, but there are many other companies where probably the crazy valuations have happened in the market, largely because of this fact of lower base, higher amount of liquidity pushing them. And at the same time, I think now with the higher base coming in, I think these companies would probably see the valuation corrections happening in the marketplace. I would be happy on one count that if market gives a correction, probably the genuine investor would definitely I think take a position into this company because long-term fundamentals of the business of any of these companies which we are talking about definitely I think remains absolutely strong and convincing. They have a visibility of next 3 to 5 years as far as their order book is concerned. So certainly any correction, meaningful correction in the price, definitely I think would mean some genuine investors entering into the stocks from the investment side.
Oh. All right, let's see if the reaction was just over and done yesterday, whether that continues, because those price targets from that ICICI Securities report, I mean, they really were noted by the market. David, morning. Great to have you on as always. Not sure if you look at these companies, but they're in focus today because of the expectation of a large block trade, Cyient selling stake in Cyient DLM. Any views here?
Yes, Shilpi, good morning. I think both these companies are looking brilliant from the perspective of looking at investment. No doubt, I think they've been commanding a valuation which is slightly higher, particularly Cyient DLM, which came into the market subsequently last year. I think the about 8 or 9 different verticals on which I think Cyient DLM is working. Each of these verticals are showing distinctly high amount of growth on the business side, be it in the area of manufacturing, be it in the area of defense, be it in the area of medical devices. Wherever I think this company has got the base, I think for manufacturing using the technology-led development, I think this company is definitely showing distinctly high amount of growth prospects. But all said and done, our markets have been extremely generous in giving a valuation to these companies, I think, on our other side. So that's where probably I think some amount of, I would say, profit booking by even the promoters is happening. And they are using this money for the purpose of repaying their debt in the parent company, which is Cyient Limited. So all in all put together, I think both these companies' business model looks, I think, absolutely promising and convincing. Correction in the price, if at all, I think it happens with the kind of selling which is taking place in the market, would be a welcome opportunity for many of the investors who would like to buy this kind of stocks into the portfolio from long-term investment perspective.
All right. Hi, Devin. Good morning and always good to see you. And Devin, I wanted to ask you about these paint stocks. And let's talk about the leader. Asian Paints is one of those companies from the Nifty that's actually negative, while the Nifty has gone hammer and tongs. It's been looking very, very good. But Asian Paints in the last 1 month or so, it's getting back into its own. I think it's up close to on 6%. Though on the last 1 year, it's still down, I think, 2-3% odd. So it's trying to find its own. Now you have crude prices that are weak, so input costs are fairly benign. And the expectation is second half of the year, volume should pick up. And now that entrant, there was that fear about the entrant coming in, that as well has been digested. Your view on the stock at around 3,000 rupees?
Hey, Nigel. Good morning. Well, I think one part of the narrative is getting corrected in the market now. At least happy situation that the new entrants who have entered into the market with the paint in the paint business, certainly after seeing the grasping result and the provision in the balance sheet, the books about the expenditure that they incurred in launching this business, does mean that I think next 3 to 5 years is going to be a challenging period for most of these paint companies to even turn profitable, the new generation of paint companies. And that's where probably I think the advantage would go to companies like Asian Paint, who is not only expanding and making the capacity reach, I think as far as distribution reach is concerned, they're creating that kind of expanded reach, I think, into the markets. So that I think time to go to market, I think, is always very important in this kind of activity. They are right in this space. At the same time, I think, as you rightly mentioned, on the other side, the crude oil prices are down, and as a result of which all the crude oil derivative prices are going down. So which is a good omen for us, companies like Asian Paint, where the profit margins are required to be talked about. So on one side, demand scenario remains absolutely buoyant and convincing, largely because of the fact that I think your entire construction segment, the real estate segment, is looking very promising for at least next 3 to 5 years. The visibility is also very strong. And the building material companies, I think, among which I think the steel and light kind of companies would come in, they are greatly showing the better kind of a growth opportunity at this point of time. So demand is strong. Competition probably will take more time to get into the profit, and the raw material prices remaining under control. All in all, put together, I wouldn't be reluctant in saying that I think this company could possibly give 15 to 20% kind of an upside from the lower base of around 2,800. I think on that base, I think you could possibly see 15 to 20% kind of an upside in the stock price in 12 to 15 months.
Okay, all right, Deven, stay on. We'll have some more questions for you. Thanks for taking us through the first round. But right now, we do have to get into a very quick break. Come back on the other side. And we'll also have, of course, a technical conversation going with our tech experts, Mitesh Thakkar, as well as Sudarshan Sukhani will weigh in on today's trading setup.
Welcome back. Well, let's continue our chat with Deven Choksey. Deven, what do you make of the metals pack? I want to first highlight the ferrous pack because that appears to be in a bit of an issue, at least just in the near term. Steel prices in China, well, they are seeing a bit of a downtake. I think overnight as well, they're down close to around 3%. The bigger problem from an India perspective is our prices are actually at a premium in comparison to Chinese steel. So at some point of time, that can find its way in there, which calls for a price correction here. Your view on some of these steel companies, the balance sheets are clean, but in the near term, there appears to be some kind of pain, both on demand and pricing.
Yeah, no, so I think my understanding on the demand side, the situation remains absolutely very convincing as far as India outlook is concerned. Largely thanks to, I think, the higher amount of infrastructure spend which is happening in the country, as a result of which I think the demand signal remains absolutely very strong and convincing. And going forward as well, as we hear, I think more private sector participation happening on spending side, I believe that I think the demand scenario for the metal commodity, I think will remain strong. The fortunately good part is that the crude oil prices are under control, and as a result of which energy cost is remaining under control. So with a lag effect of about a quarter or so, I think you should be seeing the benefit of that also into the books as far as I think the P&L is concerned. So even if I think China price is down at some point of time, I think you might have some correction in the top end prices on the sales side. I would think that I think the margins would remain maintained. Maybe I think 1 quarter gap, and thereafter you should see that. I think that most of the metal commodity companies are probably becoming an opportunity to buy into the portfolio, given this kind of technical correction which is happening in the market.
What would be the top picks? Deven, I recall you were quite positive on Vedanta, and that's done, actually it's pulled back. It went down to I think around 415, 420, and now it's on the verge of going to around 450 odd. What's the pecking order in metals?
So we continue to remain positive, Nigel, on Vedanta, and we believe that I think this restructuring which is happening in the business is also going to play a very positive role going forward for these companies. So we remain positive on the Vedanta as a whole. The other one I think would be Hindustan Copper, I think, which has corrected significantly on the price, along with Tata Steel. So I think these three companies remain absolutely very strong, convincing. Of course, Hindalco probably, I think, Novelis transaction, and then when I think it happens, probably I think would add further to it. But I think in the order of priority, I would think that I think currently the opportunity would be with the Hindustan Copper at this point of time.
Nigel, we had a discussion with a steel analyst. We had a discussion yesterday morning. And one of the things he said is that for NMDC specifically, he thinks there's a adjustment to take place because I know prices have crashed under, I don't know, $100, under $100 now.
Yes.
He says NMDC needs to lower prices by about 20%, even from here. to kind of maintain that historical gap between where prices here are and where landed import prices are. So, I mean, that's a large, steep one, 20% I mean, of course, if international iron ore prices stay where they are, that is.
Yeah. You know, so there are a couple of parts of the metric actually, Prashant, because prices are already corrected by 17%. NMDC pricing I'm talking about in the last 2 corrections. I think it was 500, another 500 odd. Also, with regard to the port where it's going to is going to be important, you know, because the east has some kind of iron ore coming from Orissa. But on the west, they could still hold prices because on that side you don't have so much. So we'll have to see how the dynamics plays out. But from what I have seen in the past is when steel as well as iron ore prices come to a particular level, the Chinese producer can no longer produce. So at that point of time, it actually hits a bit of a bottom and then it moves up. So iron ore, we'll have to see how it moves, but the steel price fall needs to stop. Currently, it's at around $460, $470, which just a few months ago was more than $600. So steel prices have fallen, which is putting pressure on the iron ore prices because it's the input cost. So at some point of time, the steel price correction is going to stop. I think it has to be somewhere around here. Otherwise, they can't produce, you know, at these kind of prices.
And what we've also seen historically is that China very quickly shuts down marginal steel production.
Exactly. So once they start making losses, then after that, they have to shut down, you know. And actually, that's a bit of a spot that everyone goes on debating about. Are they really going to reduce their production? But when the price falls, they'll be forced to reduce their production. And that, in turn, is actually a positive for the global steel prices itself.
No, I was reading another thing. I was reading an article which said that on Chinese ports, there's about 20 million tons of stuff sitting just to be exported. But as a percentage of what China produces,
it's very
it's like 1.5%.
Correct.
Annual, you know.
Correct.
So it's
what
China consumes, not produces. What China consumes. I mean, it's yeah, but it's the marginal stuff which sets the prices.
No, the problem is the exports. You know, since we're talking about steel, the exports coming out of China is back at 8 million tons, which is the issue. You know, you need to see that number coming down. And if there's so much of inventory at ports, then that number is likely to remain elevated in the near term.
Absolutely. No, absolutely. So I guess the watch point is if China shuts off the furnace. I was about to say tap, but you can't say...
Don't go to tap.
No. But anyway, so steel remains in focus. Let's see if we're somewhere close to the bottom of the cycle in terms of pricing just here and now. We'll watch for that. But they went on to another interesting debate in the market. So there are, of course, we've discussed the stocks like, Mazgaon, and all the other interesting debate is around Ola and what is happening here. Yesterday, after I think 7 consecutive days of buying, we finally had a dip coming in, but this is only after the stock has already doubled from the issue price. What's your sense? Would you be a buyer of Ola around these levels, 140 to 150, or do you think enough excitement has already played out? What is the road ahead looking like?
Yes, my understanding is that I think most of the funds who had been having the challenge of deploying funds because of the significantly large amount of cash on which they are sitting, they had to take some amount of exposure, particularly I think in the pure EV space in the automobile. So that's where probably I think they have rushed in after the listing. Fortunately, they got a price on listing at the same price at which IPO took place. So I think that rush took place, and as a result of which, I think we are seeing this particular smart jump in the stock price, double from what it was, I think, at the IPO level. Having said that, I think the fundamentals of the company would take time to shape up. As of now, I think they are seeing about 24,000 rupees per scooter that they are manufacturing. Unless they show the path of, I think, how they will bring down this particular loss, everything else remains, I think, absolutely, convincing as far as the story is concerned. But I think we need to also see that when exactly I think the losses could come down eventually. And if that magic plays out well, then I think it's a good thing to learn about. But at this point of time, I think yet to me, this is a rush, I think, which has already happened. No need to rush into it at this point of time. Maybe correction in the price would once again demand a fresh look at this point.
Devin, good conversation. Thank you very much for your time. Appreciate it here on CNBC TV18. Well, let's move on to some of the technical trades, right? Mitesh and Sudarshan are with us with exactly that. Gentlemen, good morning. Good to have you here. So a little bit of a lower drift in the US markets. Nothing of consequence. Mitesh, how would you look at how we're starting up? And on indices, what kind of trades would you want?
Morning, Prashant. So, as you rightly said, nothing very significant. My sense is that I think, today the markets could be presenting some opportunity to buy on declines, especially I keep a watch on the bank nifty. Yesterday, we had some kind of rally and then the pullback happened in the second half. I think closer to 50,600 is where I would want to enter the bank nifty. These are spot levels or around 130, 150 points lower. If you see a reversal from there, I think I would want to go and buy the bank nifty, which should in turn help the nifty also sustain and check and test higher levels. So 50,000, 50,000, and 600, 700 is my buying zone, but prefer to buy closer to 50,600 and we'll take a 200 point stop from there.
Okay, got that, Mitesh. Sudarshan, let's get you as well in the conversation. What's your view on the index? Actually, it's had a very, very good move in the last few sessions. Where do we go from here, though, both on the Nifty and Nifty Bank?
Yeah, good morning. See, we've had 3 very good days, and after a small dip, we had those 3 days. Now, markets move in short-term cycles. So I'm assuming that now, at least for today, the cycle would be either a consolidation, a choppy market, or even a small minor decline. So my view is that if you have long positions, take profits, step aside, and choppy markets never make money for me. So I would step aside for the bank nifty and for the nifty both, not do anything.
Got it. Let's talk about stocks then. Sudarshan, not doing anything. I'll tell you what, let's slip into a short break. We come back. We'll get back to Sudarshan as well as Mitesh and get their stocks. We'll also get a conversation going with market experts. Don't go anywhere.
Welcome back. This is Open Exchange, and we're coming to you live from the CNBC-TV18 Motilal Oswal studios. Let's, straight away get to the pre-opening trades when we're at 9 a.m. and those rates would be coming in right now. So in the pre-open, Nifty, the gift Nifty was, of course, pointing to a soft start, and that's what the indication seems to be, that we'll start lower. The question is whether this dip starts getting bought or not. We still have Mitesh and Sudarshan with us. Mitesh, hi, morning. So in terms of, stock action yesterday, actually the financials as a universe, I just want to take that and get that out of the way first. Financials as a pack moved up. I mean, life insurers, NBFCs, banks, everything was up. Do you see any follow through? Do you have any trades over there? And if not financials, I mean, anything else that you'll play with today?
Morning, Subhi. I already talked about the bank nifty as the key index to watch out for the day. That apart, I have a buy on Kotak Bank with a stop at 1784 for targets of 1870. HDFC AMC, not strictly a financial, but I think, dealing with capital markets, that's a buy with a stop below 4250 for targets of 4400. A buy on Manappuram around 205, 206. So if you get a mild decline, try to buy this with a stop at 201 for a target of 220. And one sell call, that's Bharti, showing some signs of profit booking. So keep a stop at 1466, look for targets of 1415.
All right. Sudarshan, what about you?
Well, I have an all buy list. That's simply because some stocks will give buy on dip opportunities. Let's see how it works. BPCL is a buy with a stop under 329. India Mart is a buy with a stop under 2860. Infosys, we have seen how IT stocks have gone up, and perhaps that momentum will continue, is a buying opportunity. Infosys with a stop under 1863. And another outperformer, Polycab, is a buy with a stop under 6673. The idea being to wait for an intraday dip and then go long in these.
Truly got that. Mitesh, yesterday you had a bunch of these brokers which were rallying. Angel One seems to have found momentum once again. I think 25% in 2 days. Motilal was up higher. There was IIFL Securities which was up and about. Anything you want to sort of weigh in on?
See, I think, I've been tracking a few of them stocks, particularly Angel One, and the stock has had a very good correction, I think, come to an end. So the stock kind of peaked out at levels of 3,800 plus, 3,900 levels, 3,856 odd. And then came down to as low as 2,000. It tested the, 2050, and it tested the level on 4 or 5 occasions in the last 2 weeks, and then has given a reversal. A big breakout. The first target of around 2,690, 2,700 is done. But I suspect eventually I'm looking at a test of 3,000 and in a good case scenario, even 3,170. So this is now a buy on declines. If you get a pullback, let's say to about levels of 2560, 2580 zone, I think keep an eye on this one. I think the reversal looks very strong and possibly will last for a few weeks to come.
Did you have one of these insurers earlier as one of your ideas? SBI Life was the top Nifty gainer, HDFC Life, ICICI Pru. Again, I mean, these are insurance names which have, were in momentum. They went sideways for a while and then yesterday came back up again. I think there's a Bernstein note this morning as well. Your thoughts, Mitesh?
So I've had buys on HDFC Life and ICICI Pru a couple of days back, not yesterday. But yesterday, I think SBI Life had a very good, sideways breakout pattern, which technically does suggest that we should see higher levels coming in over here. I think the earlier highest closing we got was around 1765 and the stock closed at 1760 yesterday. I think it should see continuation of momentum. Once we see 1760, 70 cleared, then I think the stock is heading towards $1,900 levels from a trading point of view.
Okay, thanks for that, Mitesh, as well as Sudarshan. Let's get in Rajesh Palvia, the VP Technical and Derivative Research at Axis Securities. Hi, Rajesh. Good morning and good to see you, Ben. What are the strategies you have for us both on the index and individual stocks?
Good morning, Nigel. So looking at the setup, we are holding our bullish view and we believe that, the continuity of uptrend is likely to be there in both the indices. The way Nifty is holding about 24,600 and most of the put writers are now shifting their position on the writing side at higher level. 24,500, 600 have attracted put writing. So that clearly shows that base is now shifting higher and possibly Nifty may attempt to cross 24,800 to 850 zone in the continuation of this up move. To play this up move, we are initiating here to buy a call option of 24,700. Which was closed at around 78, 79 rupees. So we are projecting target for this call option around 130 to 140 with stop loss of 40 rupees. Bank Nifty is almost now trading near to its major call concentration congestion zone, which is placed at around 51,000 level. So if at all Bank Nifty manages to cross above 51,000 mark, then possibly we may see a good short covering action in the Bank Nifty and then this momentum can extend to 51,300 to 400 kind of zone also. So on the Bank Nifty also, we have bullish view and till Bank Nifty is managing to hold above 50,500, 600 zone, one should remain on the buy side of trade. On the stocks front, one PSU bank which we are focusing at this moment, that is Bank of Baroda. If we analyze on the technical front, the falling trend line breakout is already there. In the previous day, short covering action was there on the derivative data. After a consolidation of almost 10-12 days, stock now managed to give breakout of this consolidation range. We believe that Bank of Baroda may continue furthermore upside. We are projecting target towards 265 to 268 with stop loss of 250. The second stock that we like is from the pharma space, that is Sun Pharma. Continuity of uptrend after a brief consolidation of 5-6 days in a narrow range. Now stock managed to give breakout. Outperformance is there in Sun Pharma. Stock is almost trading at all-time high trajectory. Long build-up is there in derivative data. So we believe that Sun Pharma may continue furthermore upside towards 1840 to 1860 kind of zone. One can buy this stock with stop loss of 1745. And the third stock is from Midcap IT, that is L&T Technology Services, LTTS. Stock managed to give breakout of its previous swing high. And most of the IT stocks are showing good traction since last couple of days. And IT index is almost hovering around all-time high trajectory. So we believe that, IT space may continue furthermore upside. LTTS can be a buy for upside target of 54.60 to 5,500 with stop loss of 53.20.
Okay. All right. Thank you very much for all of those calls. You have a good day, Rajesh. We'll connect again later. For the time being, let's get you some views from the Motilal Oswal conference. Niket Shah, the CIO at Motilal Oswal Mutual Fund, says that he's quite cautious on markets at the current juncture and has been very selective. He's also sharing his views on the telecom space, quick commerce and the IT sector, where he's getting increasingly optimistic. Take a look.
This quarter, Nifty earnings growth has been about 4 to 5%, which is probably slowest in the last 16 quarters. Mid-cap earnings growth has been about 5 to 6%, again slowest in the last 16 quarters. And we have been slightly more cautious on the markets, being very, very selective. Our focus of this year is to do less mistakes, right? So when we started this year, we could clearly see, earnings growth kind of slowing down. and we want to ensure that we don't do significant mistakes this year. If you don't do mistakes this year, I think you will end up in a very good outcome at the end of the year. So from a 25, 26 stock portfolio, we're now actually down to about 16, 17 stocks. We're trying to make the portfolio more and more sharper by the day to ensure that there's no mistake. So that's broadly, I think, what we have been up to. IT hasn't done well in the last 3 years, right? I mean, some of our IT holdings within the mid-cap and the small-cap space have done extremely well. But overall, from an industry standpoint, I think it has gone through some challenges in the last 2 years. We believe post-US elections, some of those challenges are likely to go out as, the pipeline of the IT in terms of the funnel or the deal pipeline that most of the corporates have been talking about is very, very healthy. So that continues to remain healthy. I think most of the corporates or enterprise in US or Europe are waiting for some clarity on US elections to get over, and that the spending will, I think, in next year should come back in a meaningful fashion. Initial part of the year, we did highlight that telecom looks like the sector of the year, and the key thesis was that India has actually seen no major ARPU increases if you take a 10-year back track record, right? So our view was that every year from year on, India needs to take a tariff hike, because from the second half of the next year, most of these telcos have to start paying to government for the spectrum that they bought 10 years back. And for me to pay, and for some of these enterprises to go and pay to the government, you need earnings, right? And there is no way you can get earnings without a tariff hike. So I think we will see a tariff hike even next year and in the following year. So we might see a tariff hike every year-on-year basis, which essentially means a very strong growth for the sector. Food delivery becomes a cash cow over the longer term. The real excitement is quick commerce business. In our opinion, for the next 3 to 4 years, you should see at least 125 to 150% kind of a top line or a GMV growth for some of these companies, which is quite staggering, right? And this kind of model is only, at scale is likely to happen in India. Because of the way our supply chains are there, the way our auto penetration is there, and we all have, a budget that we run on a monthly basis. So we do monthly pantry filling on a weekly basis, right? So that I think is quite, I would say unique to what Indian styles are. And I think these kind of business models are just started, just scratching the surface. What is actually surprising to us is that the tier 2 markets, where in some of the quick commerce, the tier 2 markets unit economics are much better than tier 1 markets. The adoption of tier 2 markets for quick commerce is much faster than tier 1 markets. So that has actually been a bit of a surprise for us. And we believe the runways is likely to stay here for the next 4 to 5 years. So we just scratched the surface in our opinion.
Okay, just scratch the surface in Nikit's opinion, but very interesting chat. And I think that one line that if you don't make any mistakes this year or minimize mistakes this year, which is buying too high at euphoric highs, I'm talking about individual stocks, you're kind of better off. They've reduced the number of stocks in their portfolio as well, and kind of sort of, making the circle smaller and staying within things that they're comfortable with. So that's the view coming in from Niket of Motilal. Well, let's talk about 9-10 calls now. And Sudarshan and Mitesh are back with us. Sudarshan, what do you have?
Well, consider buying BPCL with a stop under 329.
Mitesh, what about you?
Kotak Bank is a buy for targets of 1870. Okay,
Kotak and BPCL are the two names from Mitesh and Sudarshan respectively there. That PNB block, of course, has gone through 1.39 crore shares, 5% equity has changed hands in the block window. And stocks actually in the pre-open absolutely steady at about 827. There's 3 minutes to go for market opening. Let's talk about Signed and Signed DLM once again. Rima is here to highlight that. Rima.
Thanks so much for that. So Signed, which is the promoter of Signed DLM, is likely to sell about 14.5% stake via a block deal in Signed DLM. The issue size is likely to be 860 crore rupees. Now, we're going to be watching Signed very carefully because this is money which will go into the hands of Signed. And according to JP Morgan, the proceeds can be used for M&A and debt repayment. The company's main business has a debt of about $47 million as of June. And with the money Signed raises by selling stake in Signed DLM, that debt can be repaid. Also, the company will have money to invest in the semiconductor business. And in terms of M&A, one segment where Signed could look at making acquisitions could be the automotive space. So JP Morgan has an overweight call on Signed with a target price of 2100. Kotak 2 maintains a buy with a target price of 2050.
Okay, all right. Rima will watch out for Signed for sure. Thanks very much for the heads up over there. Vivek is joining in. Vivek, you're watching out for SJVN. Some brokerage notes here. What do they say?
Well, good morning. That's right. So LJVN is in focus. The company held a conference call after the Q1 results. A couple of key highlights, that I'll just talk to you about. Number one, the company had indicated that they're looking to pare stake in its green energy arm, that is LJVN Green Energy. The company has given more details. They're looking to divest close to 20% stake. They're looking at a valuation of close to 2,000 crore, which will value the green energy arm at close to 10,000 crore. Goldman Sachs says this, compares favorably versus their own estimate of close to 8,000 crore. Now, along with that, some negative news flow too. The company says that the Bazaar thermal power plant that the company was earlier looking to go ahead and commission has been further delayed. So the company now expects Unit 1 to be commissioned by end of FY25 and Unit 2 in FY26. The Arun 3 plant commissioning, that also has been maintained at Q3 FY26, but the worry there is that there is no medium or long-term offtake or PPA that has been signed. Goldman Sachs believe positive catalyst for the stock includes new project awards, better renewable energy project wins, positive surprise as far as the renewable energy business ramp-up is concerned, and reduction in cost of debt. However, they believe negative cost stock catalysts are further delay as far as Bazaar as well as Arun 3 is concerned, and weakness as far as renewable capacity execution is concerned.
All right. Thanks very much, Vivek, for that. So we're just sort of a couple of seconds away from market open. Indices first, and then, of course, we look at stocks and what's moving. What do we have? Opening bell, first trades on your screen. The Nifty is starting about 0.1% lower, nothing. 24,674. So 686 is that gap area. We'll see if that is able to be held on. The bigger one, of course, is the 20-day, etc. That's slightly lower, though. The Nifty Bank is down about 0.25%. 50,671 is where the Nifty Bank is opening at. A little low, a little more pressure on the Bank Nifty as compared to the Nifty at the word go. IT index, which has had a fantastic run from last Friday on, is starting about 0.25% lower as well. So that is the Nifty IT index. It's more evenly balanced. Last 2 days, Monday, Tuesday, we had just 5-6 stocks in Nifty starting in the green. But look at the heat map there. I think there are more down than what is up at this stage. 20-point lower on the Nifty. Surbhi.
Okay. By the way, actually, I want to start with the shipbuilders once again because there's so much news flow around them because of this one report from ICICI Securities. Mazgaon Dock is again down 3.5%. Just note that. We'll be speaking with the management in a short while from now. But the starting tick is negative on these. Garden Reach as well, 0.5% lower. And the other one, Cochin Shipyard, also 0.5% lower. So let's see how this goes and whether these dips get bought. Anyway, back to the headline indices. Flat trends on the Nifty right now. So the weak hands include actually some of the financials which were powering through yesterday. Shriram Finance, these stocks were up 3, 4, 5%. So today they are leading on the way down. Shriram Finance, HDFC Bank, Axis Bank, you've got ICICI Bank, State Bank of India, Kotak. So basically, the entire financials universe is on the lower side as we start off with. And then you have a couple of the material stocks, metals, materials, commodities. Tata Steel about 0.25% lower. Grasim is down about 0.25% as well. So is Ultratech. So not too much of a cut here. We're just basically a little shade of a red on some of these names. ONGC as well. So basically metals, materials, commodities on the lower side. On the upside, Bharti Airtel is holding out quite positively. The stock sold off a lot yesterday. It was the weakest performer of the Nifty. There's a bit of a reversal today. The subscriber additions are not too bad. Mild additions month on month for Bharti Airtel. For Jio, there's been a dip. Reliance is actually slightly lower right now as we speak, just about 0.2% lower on Reliance Industries. But yes, some of the life insurers, they're still catching the attention. So HDFC Life is still up about 0.5%. SBI Life is a little more quiet, but otherwise very, very flat on the index. Not too much moving, at least as of now. DRL, Nestle, HUL, Titan, that gives you the drift. That's the green side. So again, it's a bit of a morning that starts off with some of the perceived safe havens, some of the defenses in the green.
Well, that's right, Surbhi. And in fact, there are a couple of stocks that are doing very, very well. So the headline index, we're as flat as can be, but you have two stocks that are advancing for every one stock that's declining. Tell you there's plenty happening actually in the broader markets. A few stocks to note. Genius Power, the big order win, second one, I think, in the last 1 week or so. The stock is in upper circuit, up closer around 5%. So big up move is what we're seeing on that one on very, very large volumes. Reliance Power, well, that one as well has been moving circuit to circuit. The street believes there could be a deal in the offing, so let's see whether or not that takes place. But that's one of the top volume movers. So Reliance Power is well locked up, 5%. JMR Power, that's another one that's up close on 2.5%, but it's one of the top volume movers today. So that's why just highlighting that stock. Big move is what we're seeing on that. Nuclear Software, well, that initial tick was up closer on 6%. So pull up that stock. That one's doing quite well today. Godfrey Phillips, that one's pulling back a little bit. It's down closer around 3% odd, so that one's cooling off a little bit. And DCX Systems, that's another stock that influential HNI investors that were picking up stake out there. The stock has seen a correction from the recent peak, but today as well, the stock is a little bit subdued. Another stock that we highlighted earlier in our morning chat was India Mart. It's come out of the F&O ban. Sometimes you see a bit of a move, and that's precisely what's happened. So from the F&O list, India Mart is one of the top movers, up close to around 2.5%. And Nippon Life as well, up close to around 2%. What's not doing too well? Pyramidal Enterprises has pulled back a little bit. So a flat start. The good news is the mid-cap index in the green, and you have way more number of stocks that are advancing than declining. Prashant.
All right. Okay, well, that's essentially the what's up and down. We'll sort of highlight more stocks as we go along. But let's welcome in Sanjay Parekh. He's founder and CIO at Soham Asset Managers, who's here to talk markets. Sanjay, great to have you back on the program. Thank you very much for your time. We're usually chatting in the afternoon, so good to see you in the morning for a change. Just a quick word, Sanjay, on the markets themselves, because it seemed like, at least, that many a theme, especially defenses, we were just highlighting, right? I mean, you know, these are themes where people have stayed long for a while, made a lot of money. But once momentum breaks, then it's kind of hard to stay long, because then you start to wonder whether I should lock in the profits that I have, or and then let's see later, where does it want to settle? Are we entering that kind of a phase in a few sectors, especially areas like defense? Sanjay?
Yeah, Prashant, absolutely right. I mean, good morning to all of you. So, yeah, clearly these are area of frauds in valuations. The flows from direct retail or certain passive funds dedicated to these sectors also has, because these are passive dedicated sectoral funds, right? So, so they have to buy in as they get subscription. And that is, of course, the direct participation in this such capital raise has caused fraud in certain sectors, and certainly one should book profits. I totally agree with you.
So book some profits, okay. Hi, Sanjay, great to have you on. So let's explore that in some more detail. Now, where would you look at trimming positions or booking some of the profits? You know, how are you looking at any portfolio readjustments at this point in time? Give us some more color on it.
Yeah, so Surabhi, good morning. So, you know, our approach is we predominantly large cap. Our average large cap holding has been 80%. We always said at least 70% would be large cap. And I mean, even in large cap, we are at fair value plus. So our approach is be very, very selective. There are ideas very clearly across the board, but the filtering has to be very, very hard. So the main filtering criteria is valuations, right? So while there are opportunities, you know, every month you get opportunities, but there are few now. And that's our approach, that be selective, have aggressive filtering criteria. We think larger caps are overvalued, they're going faster, but 3 to 5% lower, they'll get reasonable and maybe some time correction. So we're not so perturbed with large caps. You know, I mean, 3 to 5% or even a little more is fine, you know, and some more time correction. But in mid and small cap, there are pockets of fraud. I'm not saying all of them are frothy, but certainly there are pockets of fraud, defense being one. Some of the themes in railways are also going berserk. At 60, 70, 80 times, I don't know whether, you know, there's money to be made, you know. So, and this is, we know the euphoria on the flow side, you know. So that is also where we are worried, and we are clearly going to stay away from such segment. And selectively, as I said, in large cap, mid cap, small cap, you do get opportunities. And that's what we are looking out for.
All right. Hi, Sanjay. Good to see you in this morning. And you mentioned in the past, I think L&T is something that you like. You prefer them in comparison to the other names that are trading at very elevated valuations. Just coming back to you, Sanjay, and I wanted your thoughts on Ola Electric, but I wanted to focus on the stock of the morning, actually, Mascon. You know, we were talking about that stock being lower. Just pull up the intraday chart. You know, the intraday chart will tell you from the lows of the day, in a matter of minutes, the stock is up close to around 8% or thereabouts. At some point of time, the director will put that up for our viewers on the screen as well. But Sanjay, you know, what about Ola Electric? You know, At IPO price, people were debating, well, the stock has almost doubled.
Yeah. No, it's surprised. I'll be very honest. We've not participated, but there were few colleagues who were positive and they participated in funds also. And definitely, such a big move, you certainly have to introspect, right? So we've not participated. Having said that, there are comparisons you saw yesterday with Hero versus Ola, and those needs to be kept in mind. Some companies are made in 50 years, and some of these new generation companies, they speed up so fast, and execution is certainly important. Having said that, we certainly not undermining the strength of this new generation companies. They're phenomenal companies with great products, great pipeline, and definitely very, very positive. But just that valuation is discomforting, at least not in our style of growth at reasonable price.
Okay, all right. So you're choosing to give that a miss, but what would you rather play? Because you like the theme. The EV theme is something that's definitely going to take shape in the next few years. By 2030, various estimates suggest that there'll be a far larger, exposure to EVs. So in that context, Ola valuations, well, debatable out there. But what else do you like then from the auto space?
So, we're very positive on ancillaries which are catering to this or transiting them. We have two of them, one of them transiting towards that segment, Sansera, and even Samel, Samadhan Motherson, certainly is very, very well poised when the EV segment takes off, because it's actually agnostic, all the products that it has. So we're very well poised on that side, as it takes off. And then overall renewable also, we are on the power space, we are there. On the EPC space, we have Solar Wilson. So we like the theme and we have participated. But we would want to participate in a stocks where they are reasonable price and reasonably valued at our end.
Okay. Nigel, just to go back to the shipbuilders, we've got to fire those stocks up because the classic bull versus bear playing out on a Mazagon dock, on a Cochin shipyard, on a Garden Reach right now. These stocks open slightly lower. Let's get the stocks up on the screen if we can. They opened slightly lower. Yesterday, the declines were as much as 9% on some of the stocks. And today, the start was lower and the dip is getting bought. We're going to be in conversation with the management of Mazagon Dock in about 15 minutes from now. The contention in a report that was put out yesterday, it was a report by ICICI Securities, and it caused a flutter because their target prices are substantially lower, 50, 60, 70% lower from where the stocks are trading at right now. Now, the contention in that report was that for a company like Mazagon, for instance, the best of the revenue recognition will play out over the next 2 years. And after that, margins and EPS, it'll all sort of, peter out and it'll become very range bound. And therefore, ICICI Securities felt that the valuations are simply not justified. Classic bull versus bear. And, right now the bulls are snapping up that stock. Oh, yes, we'll ask the chairman and managing director about the business. Of course, he's not going to talk about the stock and the valuations, but the business, really. Can the growth momentum continue? That's coming up at about 9:50. But, Sanjay, weigh in on this debate. Whether it is some of these shipbuilders or some of these other, for instance, look at a stock like GE T&D today. There's some reorganization by the global parent. They might be selling some stake and, simplifying their holding structure. That stock's on down circuit right now. But again, whether it's shipbuilders, whether it's these MNC capital goods plays, they're fetching top dollar in terms of valuation. Where do you think it still makes sense to hold, if not buy fresh?
I think, the government, which is the largest owner of this, should provide the supply. I think, they understand the valuation. We saw the whole PSU basket at 13-14 lakh crore. Today it's 65 lakh crore. So I think the government should suffice this demand or euphoria by providing supply. That would be a very good thing because it will mean monetization by the government and then giving the supply where there is hunger, either through passive funds or through direct. And that, I think, is a very, very smart strategy that government should do of providing supply in all the stocks, because the valuations are really good for them to monetize. And that should be, at least, I think, because, at least, as I told you, right, 60, 70, 80 times just doesn't fit in our strategy. We would not be participating, and that's our approach. But government clearly can monetize.
All right, interesting. Yeah, could make sense for the government to take some money off the table. But talking about government taking money off the table, they didn't do it. Vedanta stock, I think that you're being fairly positive on, and the promoter has been making the right moves. They went ahead and they took some money off the table in Hindustan Zinc. What's the view on that one? Because, this one has been a very, very dicey one and tricky to play with the promoter, mostly not making moves in a linear manner. But now the street is quite excited. Your view?
Yeah, Nigel, so you all have covered it so well, and I think they're making all the right moves. We luckily got it way early, and then we participated even a little lower than current price as well. I think here the worry was the parent's leverage at 6 billion was discomforting, and the promoter is consistently doing the right things, and I'm very, very confident that they will get it to $4.5 billion of debt as a first milepost. And once they reach there, then the risk significantly reduce, which was a hangover for the stock. And then the business. We always. In terms of their execution, the way they run the business is absolutely impeccable. And then it will be towards this business. And the HZL monetization, I think, is a very smart move because HZL we pay the dividends to Vedanta, and Vedanta in turn should effectively pay 13 rupees. They've already paid, I think, 15 rupees. So 28 rupees dividend in the last 6 months you got, which at least we were looking yesterday, it's 9% on our cost as a yield. So, and then you also getting growth. So I still feel that it is undervalued. The promoter has to make the right moves towards creating value, which it is doing.
Sanjay, this is not about what you own, but what you don't own. And correct me if I'm wrong, you don't have exposure to insurance as a space. That's cited by a few investors as a combination at this stage of the market where there is some valuation comfort and there is growth visibility as well. Not very high growth, but there is growth. And the other is healthcare. I think pharma, etc. I think you don't have any exposure. Of course, you can't own everything, but I just wanted your thoughts on these two areas.
Yes, so we have Sun Pharma and Aurobindo on the pharma space. We don't have hospitals and the healthcare space. That is what we have. And the earlier one you asked, I missed it. Sorry. The other one.
Insurance.
Yes, so insurance. We genuinely looking at both SBI Life and HDFC Life. They are good defenses. They come out of those low growth phase, and now of course the growth is more from ULIPs, but I think they are now reasonable on valuation. We don't own in our AIF, but we own in our PMS. We're looking at it very positively to buy at the right price. One of them.
All right. That's the view coming in from Sanjay Parekh at Soham Asset Managers. We've got the market, which, by the way, is down about 17 points or so. And we've got, lots of stuff moving around as far as overall market is concerned. Just too early to look at the overall market breadth. We'll do that in a bit from now. But be rest assured, the index can tell you whatever. There is a lot of stuff moving up. I think more up than down by far. On your screen, 1600 to 600 advances to declines ratio. Guys.
All right. Well, let's focus on our next company. Then we have All Cargo Logistics. The stock is in focus. It was buzzing in trade yesterday. Well, it reported the highest ever monthly volume growth for the month of July. To discuss this and more, we have Mr. Ravi Agarwal, the Chief Strategy Officer at All Cargo Logistics. Hi, Ravi. Good morning, and thanks a lot for joining in. Well, give us a couple of details then. Tell us what's the average freight rate in quarter two if I compare it to quarter one, and also what are the volumes you're building in for quarter two and for the remainder of this fiscal as well.
Yeah, so I think last 4 quarters or a little more than a year, the global trade was in a phase of a subdued economies in Europe, and the overall trade was down. And we had been anticipating that we'll be coming out of it with inflation easing, with interest rates likely to soften. And we are now witnessing that people are restocking the inventory. So inventory levels are moving up. And typically what happens is, when you move from 3 weeks of inventory to say 5 weeks of inventory, you're essentially providing a 4% sort of a growth on the overall annual volumes. Now, that's the kind of trend we are witnessing right now. And with all the disruptions, the Red Sea crisis continues. We are also finding that the supply-demand imbalances which had happened in the last 12 months have also been balanced out. So we are finding that the freight rates are now more consistently in the higher range. The volumes are rebounding. As a company, both driven by this market improvement as well as our own initiatives, we have reported for the month of July 818,000 cubic meters in LCL, which is almost 5 to 6% higher than last month. It's almost same as the highest ever we reported a couple of years ago when the trade was in a very different cycle. So we are witnessing that this trend should sustain from here. And right through the remainder of the calendar year, we believe the volumes should remain strong. And the good part about this growth is this is not specific to any geography. We have found for the month across the board, be it Americas, parts of Asia, including China and Vietnam, and even European markets have seen an improvement in the LCL volumes. So that's on the LCL trade. On the FCL trade as well, we have seen almost 6% increase over the last year, same month, July to July comparison. So overall, there's a clear sense that markets have confidence that consumption would come back. People are building up inventories, whether it's in US or other parts of the world as well. There are some bright spots, call it out, Indonesia, Vietnam in Asia, India, of course. And then you have some of the Latin American countries like Brazil seeing some growth in trade. So overall, the trade was in a very subdued situation over the last 12 months. But now, since mid of June, we have seen there's a good sharp rebound in trade, and we expect the momentum to continue for the months to follow.
Ravi, if you look at some of the macro-ish data points, what you guys are doing and what many analysts have highlighted is, cost-saving measures and efficiency drives, etc., which is great news for the company. But overall, many are pointing out that we are actually now entering, perhaps, after a long time, a synchronized kind of slowdown, especially in terms of global trade. You're telling us, actually, it's the opposite. You look at what's happening in Europe, you look at what's happening, fears of slowdown in the US, China is where it is. Of course, there'll be hotspots in smaller regions, but just wanted your thoughts, if you can clarify that a little bit more, especially on the container side.
Yeah, so I think, what happens is many a times the global view is more connected to the view of the Western Europe and China. And we know that supply chains have been diversifying. So China hasn't really been the bright spot for the global markets. And Europe in particular is still in a bit of a subdued demand. So, if you look at exports out of Europe in particular and some of the overall consumption, it's still low. But what's happening on a global basis, and, we kind of represent global trade with our breadth of presence across the world, we are clearly witnessing that there are good pockets of growth. And they are more than covering up for the lack of growth in Europe, for an example, compared to what it used to be 2 years ago. And of course, there's diversification. So, India, Vietnam, Indonesia, some of these countries are eating into the share of exports as compared to, what China used to do a couple of years ago. So overall, if you look at the freight rates, because they reflect the supply chain imbalances, I think if you look at just this year, we had almost 1.5 million TEUs of new ship capacity on the container shipping, which came into global trade. And despite that, we have freight rates which have continued to increase from April until about June end, and now they've kind of stabilized in a range-bound manner. And freight rates have remained high. The cargo which was being booked 1 week in advance 6 months ago now requires 2 to 3 weeks of planning at least. So there are clearly on-ground situation which is happening that there is a rebound in trade. The only caution is this rebound in trade at this point in time is also linked to the inventory rebuilding. Now, inventory rebuilding is often on the forecast and assumptions of consumption growth kicking in, and that's something which is expected. And we are seeing some green shoots, but for this growth momentum to sustain, say over 12 to 18 months or longer, it will need to come into that territory wherein interest rates continue to come down. There's more disposable income in the hands of European and the American consumers. They're in a position to increase consumption. So all of those factors will have to continue to play out. But at this point in time, they're clearly seeing elevated freight rates, and that's an indication of renewed global trade demand.
Ravi, hi, morning. It'll be really helpful if you can put some numbers to it, both on the revival in freight rates. What is the increase you've seen so far in Q2, the last couple of months? If you could just give us some, numerical indication. And also, as you're talking about volumes being buoyant for the remainder of the year, again, some rough range that we can work with. What kind of volume growth across both the segments that we can perhaps look at?
So if you could look at the long-term range, we had been talking about LCL industry globally growing at, let's say, 5 to 6%. And on the back of that, company growing double digit, that's been the aspiration. Now, what happened in the last 12 months was industry was perhaps degrowing by 10 to 15%. And that 5 to 6% delta on the company meant that we also saw a decline of 8 to 10% from our peak numbers. Now what we are seeing that there's a bit of a growth kicking in, which means that instead of a decline, now we're in a phase of marginal growth in the industry. And with our ability to outperform the market, we are now witnessing, like I spoke about, a good 7 to 8% growth, whether you compare last year or last month. So we believe that the growth should be in the range of 2-3% for the months to follow and should gradually pick up from there as the demand sustains. And we would continue to outperform the market. And therefore, we could potentially look at growth numbers going back to where we were aspiring, say 15 to 18 months ago. That's how I would put it in a broad range.
Okay, and just a word also on the international supply chain revenues, because if I look at the trajectory over the last couple of years, that's where there's been a dip from about 17,600 crores in FY24. You were down to about 11,250 odd crores, with margins also dipping. What's the outlook on that business?
So I would say, in the international supply chain business, a large part of our cost and revenue is ocean freight, which is quite volatile. So for our business on international supply chain, one has to look at the gross profit, and that's the right parameter of evaluating how the business is performing. And as we have been sharing information on a monthly basis, that is driven by volume, utilization, and the mix of containers. And in terms of numbers, I can share that our container utilization has increased almost 10% over the last 12 months. The mix of 40 feet containers has increased about 6 to 7% as well. And the volumes are also up. So a combination of all these things should drive gross profit, upwards. And that's how, with the cost conservation that we have done over the last 6 to 9 months in particular, we should be in a position to improve the profit margin. That's been the broad strategy at play. Conserve the cost, which is in our control, and hope for the markets to revive and then outperform. And we're glad that things are starting to play out over the last couple of months now.
All right, and of course, the market's taking note of all of that as well. Thank you very much for joining us, Ravi. Good luck to you, and we'll speak again. Thank you. We'll take a quick commercial break here with news that the market is still down about 15 points, so it's flattish, like how US was, just a drift. I mean, nothing more than that. It's basically broader markets which are still looking very good, with about a 2:1 advances to decline ratio. The largest volume traded name is once again Ola Electric with a 3% gain. And of course, there are many others. We'll highlight some of this stuff in a bit. We'll take a break. We'll also have the management of AkzoNobel India to talk about their business in the quarter gone by, but more importantly, the outlook ahead. Stay tuned, that's coming up. Okay, welcome back. Let's put the spotlight in the paint sector now. And to sort of talk about this, we have Mr. Rajiv Rajgopal, Chairman and Managing Director at AkzoNobel India, joining in. Mr. Rajgopal, good morning. Great to have you with us here on CNBC TV18. Prashant this side. Let's just talk about, how demand is panning out in the second quarter so far. Did price hikes get absorbed? To what degree? Just give us a color, sir.
Good morning, Prashant. Good morning to you and the viewers. Yes, the price increase happened in two tranches. The first tranche was end of July. The second tranche was around the middle of August, 12th of August. It's too early to really predict because the prices were to a tune of about 1.5%. So it's not really massively significant. But yes, you did see a little bit of a blip during the price increases as you would, which is basically a little bit of stock up. Yeah, but we continue to sort of focus on driving our volume, like in the last quarter where we had a double-digit volume growth as a consolidated paints and coatings company, driven well by both the paints and the coatings verticals. We continue to be making sure that we are driving our key categories, particularly with focus on premium, making sure that we are competitive in our mass and economy offerings in the paint side, and on our coating side, making sure that we are able to give better value propositions to our customer across our businesses. So suffice to say, Prashant, that initial months, I think it's better than the last quarter, if you ask me, but we've still got a month and a half to go. So, it's too early days to really give you any projections for the quarter. For the full year, we still remain committed. We are still saying that we will deliver a double-digit volume growth for the year, for the fiscal, and we continue to see a mid to high single-digit revenue growth.
I mean, mid to high single-digit revenue growth, volume growth in 10% plus?
Yes, volume growth I do maintain, and as we've also demonstrated in the last quarter, will be double digit. It'll be 10% for sure.
This is now the festive season all the way to the end of the year, and this will be a busy season for you as well, right? Is it too early to gauge whether, I mean, it's really sort of demand inquiries, etc.? Is it too early?
It is a bit early because really, I think you normally start seeing the uptick in the first week of September. So September, October, this time Diwali is a little early. It's in the end of October. So that's when you'll really start seeing the uptick. But yes, it's slightly better than what we saw. And I do think that the consumer sentiment, both across urban and rural, is a little better than what we saw in the last quarter.
Okay, so that's the outlook on the volume growth at the top line, Mr. Rajagopal. Hi, morning. Let's talk about profitability and margins as well. And I think the question on people's mind is whether this price hike has been well digested, whether you'll attempt more price hikes as we get into the thick of the festive season, and whether the margins can be sustained. I think first quarter you were close to 16%. So what's the margin trajectory looking at input costs for the rest of the year?
So we believe at this point, Surabhi, that look, we see approximately about a 2% increase in the raw material. So we are ballpark there on the price increases, and then we obviously will look at some of the commercial excellence initiatives to make sure that we continue to remain in the same band. As I said, our endeavor is now to hold our EBIT margins. We were one of the few players really looking at both sourcing initiatives and cost initiatives to make sure that we delivered a profitable quarter. So we continue to be focused on that journey. Yeah. But I would still say a little early days. The competitive activity is yet to heat up because the season really, in a way, would start between September and October, and that's when you will really start seeing the next sort of signs. So far, from what we've seen for a month and about 2 odd weeks, I think it's fairly okay. We would believe that we are still on the journey.
Okay, speaking of competitive intensity, I mean, that's been the talking point in your sector, right, sir? So what is the sense you get? And you have your ear close to the ground, close to the business. Again, back to the question on price hikes. I think everybody took notice of the price hike because it happened when so many new big players, deep-pocketed players are coming through. So again, the same question, would you expect some more price hikes to be pushed forward? Or is it too early to say? And also tell us about market share, since we're talking competitive intensity. You want to sort of rise up the ranks on the premium segment side. So what's happening with market share?
So firstly, Surabhi, to the question on price hikes. See, at this point of time, what the sort of inflation on the raw material side we seem to be covered. We'll have to see how the vagaries of the commodity price moves in the next few months, and then accordingly we will have to take the decisions. We want to make sure that we are maintaining our competitiveness while we take the price hikes. We are already a premium brand, as you're aware, and so we want to be extremely careful of the fact that we don't want to. So that brings me to market share. Look, I believe that we are getting market share. We are closer. We in the paint side, we were at about 4.5%. We have all the way moved up to almost 5%. If you look at, we are in the top 2 now over many quarters. If you take a 2 years also, we are in the top 2 in terms of growth, right? And not just growth. Remember, we are a challenger brand. So it's also very important for us to maintain profitability as we start getting those growth. So really a tough act, but yes, we are up to it. We put our strategies in place, and so far, as we've seen in the last quarter, we seem to be on course.
Got that. 2 questions. In terms of touch points and distribution, where are you at, and what's the target by the end of this year? And on market share on the premium side, where are you at now?
So first on distribution, Prashant, we were at about 22,000 outlets. Our first target is to cross 25. You see, our definitions are a little stringent. So when you hear this, we look at outlets with a certain minimum amount of revenue. So our metrics are a little different from how the industry looks at it, and that's only because we want quality outlets. Given the fact that, as I mentioned, we are a challenger brand, so it's very important to make sure that your value per outlet. Yeah, and the same store growth is also kicking in as we start expanding. And your second question was, Prashant?
Market share in premium segment. And what would you like that to go up to? I think you were at about 16-17%.
So I've said we'll go up to about 30,000 outlets. In terms of premium, yes, that was your second part.
Yes, yes.
17% market share. Look, we are continuing. Our premium is really growing, and that's born from our contribution margins. You see, we've got one of the highest contribution margins, gross margins in the industry, and that's what has also, sort of been accretive to our margins that we've delivered. So we continue on the track. What have we done? We've launched, for example, a super premium, uber premium product called BT Eterna very recently. We've just put it in Delhi and Kolkata. We'll be coming to Mumbai and some of the other markets very soon. It is, it's going to be a paint with a stroke unmatched. I can tell you because, we've tested it enough. And this is really for consumers, who are very discerning taste, and making sure we continue to serve, the high-end customers in a manner that they would like to. So that's really the focus, Prashant, if I've answered your question.
Prashant, are you painting your house this Diwali? It's for discerning consumers, so there's some thought.
I'm hoping that all of you paint
with two kids, I've decided I should do it once every decade. There's no point. Otherwise, I'd be doing it every year. But Rajiv, it's a pleasure. Thank you very much for joining us, and great conversation and great speaking with you here on CNBC-TV18. So that's the perspective coming in from AkzoNobel. 15 points lower on the Nifty, 24,685, 90. So basically bouncing around, but not very much in that sense. The big mover is PNB Housing. PNB Housing is up 7%. That block got done in the window, and it's surging as we speak right now. There is Signed, which is looking up. Nucleus, after yesterday's 20% move, is up another 8.5% right now. And there is something like a HG Infra, which is coming up with strong gains as well. But I think we've got the management of Mazgaon with us.
Absolutely. And before we get to the management, let's pull up the stock price, because there's an interesting tug of war that's been taking place in the market since yesterday between the bulls and the bears on this stock. The stock started off a little soft. It's recovered quite well. Mazgaon is actually down about 25% from the peak. And yesterday, the decline was a little more pronounced because of a note that was there in the market. ICICI Securities put out a report. The target price was substantially lower than where the stock is trading at right now. The target price is close to 1,100. And, there's a contention there by that one brokerage that perhaps as the execution of a lot of the large projects gets underway, after FY26, the surge in margins, the EPS, that will all sort of cool down. It will become range-bound. And then the stock will have to perhaps contend with valuations which perhaps could be out of whack. So just summing up that view, which led to a big decline on the stock yesterday. But we want to get an idea about the business ahead and whether any of these concerns are well-founded at all. Sanjeev Singhal, Chairman and MD of Mazgaon Dock Shipbuilders, is with us. Mr. Singhal, thank you so much for joining in. So, of course, your business always gets a lot of attention and attraction in the listed markets. And we want to start off with exactly that. You had a fantastic first quarter. Your margins moved up to 27%. You've been delivering ahead of schedule on a lot of the marquee deals and the marquee names. But the concern is really that whether you will be executing most of your order book by FY26 and what happens after that. So let's start by getting the order book picture. Where do you stand? What is the addition? And how much will you grow the order book by this year? And what is the execution timeline?
Yeah, good morning, everybody. With respect to the company fundamentals, we would focus only on the fundamentals. As far as the order book is concerned, we have a current order book of around 40,000 crores. Recently, we have added 4,600 crores of a offshore project from ONGC. Last year also, we received fresh orders worth approximately 7,000 crores. So if you look at the order, the number of vessels which we are executing today, we have orders for around 30 ships which are to be delivered over next couple of years. And apart from this, I have mentioned earlier also in a very transparent manner that we are poised to receive one more order with respect to additional 3 Scorpion submarines, for which costing committee has had 2 rounds of evaluations, and we believe that they are close to submission of their report. And subsequent to the submission of the costing committee report, there would be, if required, any technical or financial negotiations. And we expect this order to be placed on Mazgaon Dock anytime soon. Apart from this, there is an order for P-75I submarines with AIP fitted, where MDL is participating along with TKMS Germany. As per the reports available with us, the field evaluation trials of Mazagon Dock Shipbuilders and TKMS have been found to be successful. And this project also would be progressing at a desired pace. So maybe next year we can expect positive developments on this account. Apart from this, also,
sir, if you just allow us to interrupt you, sorry for that, just to understand the nuances. Some questions, one step at a time. You said the order book right now is 40,000 crores. That includes the delivery of 30 ships over the next couple of years. You will execute this order book over what period of time? And in terms of revenue recognition, what should we expect in FY25, FY26?
I'll not be assigning any numbers for FY25 right now, but yes, we are looking for growth over 23-24. And this order book, we plan to execute over a period of next around 4 years. And then there would be certain pendings with respect to the D448 liabilities and the warranty executions. So maybe 4.5 years, 5 years, this order book would be liquidated. But at the same time, we are expecting substantial orders in next, in a short while.
Yeah,
I would say.
Okay, let's
maybe next 2 to 3 years. So before we execute the order book, the fresh orders should be in place.
Yeah, no, absolutely, Mr. Singhal. Good morning, Prashant here. Yeah. And I mean, it's been such a wealth creator, the stock over the last couple of years. But we'll talk, of course, only about the business. So let's talk about that P75I submarines, right? Six in total. You've submitted bids. You're saying that what you've submitted has been found to be satisfactory. I think you told us that the order value there is about 43,000 crores. By when can we...
the AON value as on 2018 is 43,000 crores.
Yeah, absolutely. By when will we see something this year? Or you said the final award will only happen next year?
Yeah, we are expecting next year.
Next year. First half, second half?
Such fine timelines would be difficult to define because a lot of procedural issues are there, a lot of agencies are involved. These are mega projects. But yes, positive developments in the right directions are happening. So if things are moving as per schedule, then we expect sometime next year before December, order should be in place.
And how many, there is a private player in a JV also in the fray, right? What would your expectation be? You've submitted for all 6, but typically, how does this happen? I mean, if there are 2 players who submitted bids and both are found satisfactory,
As far as the RFP is concerned, the entire lot of 6 submarines will be awarded to only one of the consortiums. Shipbuilders, considering its strength, is very positive about it.
No, absolutely. Get that. Before we spoke about the submarines, you were talking, you started with another large value sort of bid.
For 3 submarines, just clarity on that, sir. So P751 is separate.
That is next year.
That's next year. You said that there is another large order for 3 submarines where technical studies are undergoing. Can you tell us more about this contract, the size, the potential, and by when perhaps, we can get the final award on it?
Currently, we are executing P75, which comprises of 6 number of Scorpion submarines. We have delivered 5, and the 6th one is scheduled to be delivered by this year, probably by 3rd quarter of this year. And in a continuation of the same P75, there is an additional discussion with regard to 3 more submarines of P75, Scorpion submarines. So these 3 submarines, we have already submitted the technical as well as the financial documents to the ministry, and this has been evaluated by the costing committee twice. And we believe that the costing committee is close to finalizing their estimates and assessments. So this is likely to be finalized, and this could happen very soon if things go as per schedule. So this is on nomination basis and likely to happen very fast.
And this is and what's the value, sir?
A1 value would be something around 27,000 crores.
And that should happen. I mean, the award should happen this year. Over the next couple of months.
Yeah.
Okay. It's possible that by when we are speaking with you same time next year, of course, that's not the next conversation we'll have. We'll have hopefully many between. but you will have, that 43,000 crores and this additional, which is expected to be awarded in the next couple of months. I mean, we're looking at a sizable accretion possible.
Yeah, with respect to the first three submarines, we are absolutely positive that it should definitely.
That's nomination.
To that. Yeah, with respect to P75I 6 submarines, I said we are hopeful by December next year, things should be in place.
Okay, things should be in place.
All right. So now that we've understood the way the order book is shaping up, just a word on revenue recognition, because I'm going back to market concerns and the concerns could be based on stock valuation, but just to understand the business mechanics, one of the contentions is that as you go on executing this order book, revenue recognition is based on certain milestones. So maybe the pace of revenue recognition will slow down. Maybe the margins will come off. I mean, you're at 27% in Q1 of FY25. So just tell us, as you execute these large orders, what is the revenue recognition and what happens to margins? Can you sustain 27%?
Yeah, we have never said that whatever margins are there, these will continue as it is. It will depend upon the order profile. But yes, what I can say is that currently the position is reasonably comfortable. And because these projects, with respect to destroyers 15 Bravo, this is coming to a fag end. We are out of 4 destroyers, we have already delivered 3, and we are scheduled to deliver the 4th one also this year. So this project would be closing. So any cushions which are kept with respect to liabilities that may arise, the cost to completion, this is reworked on a quarterly basis and every year in a much elaborate and granular manner. So if any cost savings are there, they are released as profits. So this kind of a scenario would continue. Whenever a new project is there during the initial stages, normally the cost estimation is on a conservative side. It may not be absolutely accurate until the orders are formed up and placed. But as we progress into the project, a greater clarity emerges and we are more aware with respect to at what cost we'll be able to complete. So revenue recognition in case of large projects normally happens in this way. So I don't see, I'm not saying that the margins at the rate of 27% are going to continue, but yes, I definitely see whatever projects we are participating in, reasonably healthy margins are catered for.
So what is healthy, sir? What is a realistic expectation to have? Not 27%, you've clarified that, but what could be reasonable, sustainable on a full year basis on margins?
See, it would depend. We are a cash surplus company. There are no working capital concerns, and there are no liabilities in the form of debts or any loans. So, with respect to the investments, also there is a sizable accrual in the form of interest income. And as far as the projects are concerned, projects may reasonable margin would be something around 10 to 12%. And taking the repair verticals, the offshore projects, which we have now started in a significant manner, without assigning any numbers, I would say that anything about 10%, 12% would be a reasonably healthy margin.
The offshore project, you're referring to the ONGC one, right? So we're running out of time. But just to understand, I mean, the large chunk of the order book, obviously it's all naval right now. Is there a conscious sort of effort to go beyond naval projects as well? Will we see more of these ONGC type projects? What's the what's the revenue mix that we can expect, say, 2 years down the line?
Yeah, definitely. MDL was in offshore business around 22 years back. So this is one vertical which we are now revisiting and reviving once again. So this would be a separate revenue stream in addition to the naval projects as well as the commercial ships. We are also looking at the repair and maintenance sector. Although these sectors, like repair and maintenance, we don't target more than 8 to 10% of our total revenue pie. And similarly, with respect to ONGC, of course, with respect to offshore, this can be a significant contributor to our revenues going down the line. Because we see a lot of potential in this, and there can be a long-term. We see a long-term engagement in this area.
Okay, and so just checking. I know you won't really tell us much on this, but in case you've heard anything, in New Delhi, anywhere around you, any talk of any stake sale by the government? Anything from DIPAM that you may have picked up in conversations?
That would depend upon DIPAM only. So whatever the directors from the DIPAM side, we'll abide by that.
All right, Mr. Singhal, we'll leave it there. Thank you very much for your time. Appreciate you joining us and running us through all of that in a detailed fashion. That's Mazgaon Dock with Perspective. We'll take a quick commercial break here. We are back with more. Markets, I think, also swung back into the green. I think last I saw flattish, but off the lows. Manisha puts the focus on commodities. Stay tuned.
Welcome back. Well, let's now turn the spotlight to the market once again. Very, very range-bound and choppy in a narrow range. That's what we've seen so far. Mitesh is back with us. Mitesh, what's the advice and what are the trades now?
Yeah, so we're still looking at stock-specific trades. Alchem Labs, Alchem is something which is on my focus. It's been consolidating sideways for the last many days. And today showing signs of continuation on the upside. So keep a stop at about 57.15. Look for targets of 5,900 plus here. I think the stock can do even higher because it's at all-time highs. So it looks very positive to me. And the other one is Naukri Limited, which is Info Edge, which is also gone into sideways consolidation for the last 3-4 days. And this can now be bought at a stop below 73.60 for targets of 75.80.
All right. Mitesh, thank you very much for that. So those are individual trades coming in. Commodities in focus. Manisha is here with what she's tracking. Manisha, good morning again.
Thank you for that, Prashant. Well, I'm looking at the soft commodities. Well, the agriculture commodities have been quite volatile as well. In the Indian markets, we're, of course, looking at festival demand, the monsoons and the sowing numbers and various measures that the governments have taken. In the international markets as well, it is pretty much the same, the kind of measures and the weather concerns that we have seen for many of them. So I have a couple of gainers on my radar right now. I'll talk about Arabica coffee, which the prices are trading at almost 2011 highs. This is after drought conditions in Brazil, which has concerns about yield there. And also because of the strong Brazilian real, you have discouraged exports coming in for that one. So this is one thing that has been surging up. The other industrial commodity which has picked up in recent few months has been the rubber prices. 2-month highs on this one. There are supply concerns on production. Logistics have continued to be expensive and delayed as well. Thailand has seen challenging weather. Malaysia production has increased, but only by 0.2% as compared to the previous year. And then you are looking at strong global demand for rubber from whether it's automotive as a sector, healthcare and construction as well. Well, that's exactly where the gainers end because there are a couple of agricultural commodities which have seen sharp declines also. Sugar, for one, is now trading at 17.5 cents a pound. It's a 2-year lows, the weak demand from China, decline in crude oil prices, and then, of course, the fact that Brazil is producing more sugar than ethanol this time around. You are looking at record sugar production coming in from Brazil, strong crop expectations in India as well because of strong monsoon and higher acreage areas is something that continues to weigh in case of sugar there. Soybean is yet another one. So overall, the edible oil pack has continued to decline. It's a zero duty import that Indian markets have been looking at. So we are looking at soybean prices at a 4-year lows. Palm oil prices at a 6-month lows as well. It's a record US harvest this time around. And the global ending stocks also expected on the higher side. So when you look at the charts for the last 1 year, you will see that decline for edible oil prices. Soybean is down 14%, palm oil down 6%, and sugar prices have declined by 4% in the last 1 month. But then there are gainers as well, as we spoke about. So rubber is up 7% and coffee up 2%, and cocoa has continued to surge, up 14% in the matter of last 1 month.
All right, Manisha, thank you very much for that. A lot of the commodity action summarized there. We'll take a break. We are back with my colleague Lata, getting you a CNBC-TV18 exclusive. She'll be chatting with the SBI chairman, Dinesh Khara. That's a special conversation you don't want to miss. Stay tuned. Coming up.